By the end of this video, you are going to learn how to trade market structure in a way where you can pick the directional bias correctly around 65% of the time, which is going to help you win more trades. This is video number 1 out of a small series of 6 videos, which is going to help you build out a profitable trading strategy. So if you are new to trading and new to the channel, make sure that you subscribe, because we're going to be going through step by step exactly how to trade a profitable plan, as well as documenting everything correctly so you can improve in the future. I may as well announce before we get stuck in that I have just launched a new markup service where you could earn while you learn, where I share my trade setups for the day, exactly what it is that I'm looking for, and the trades that I'm most likely to take based on my directional bias. Let's get cracking. One of the most important things that you could get right in trading or get wrong is market structure and directional bias. Why am I focusing so much on market structure? Well, it's just the way that the market tends to work from a human perspective. We can identify based on structure where the market should be going next, using nothing but historical statistics to help us identify what's going to happen or should happen in the future to a very, very close degree. It's best to trade with structure. I am a structure trader. I basically pick out patterns which have mathematical probabilities which are going to work in my favor. And I'm going to teach you exactly how to do that and keep it super simple. Right now, you are looking at the H4, so 4-hour time frame structure of the whole of 2024 to the present day. And what this is doing is marking out the directional bias for our trades. I use 2 main timeframes. I use the M15, which is a 15-minute candle, and I use the H4 for my direction mostly. Now, marking this out took a grand total of about 10 minutes. It doesn't take long to do a load of back testing, which means that when you are forward testing and live trading, it takes seconds per day. So that helps me with deciding where I want to go with my trades. Do I want to buy? Do I want to sell? Where am I expecting for the market to reverse on me? Where I'm expecting the market to take off? And I do it with a fair degree of accuracy. We're going to learn today how to do this, and it is the basis for our trading strategy. First of all, with market structure, let's try and figure this out. I'm just going to say to you, if you were to mark out market structure, there are a couple of elements that you want to consider first. Let's move my head out of the way. So looking at this, any trader should be able to say to you, what direction is the market going in? Right here, right now, price is over here. It's in the middle of a structure. It's in the middle of 2 structures actually. But first of all, you want to identify where the high and the low is, okay? So highs and lows, very, very basic way of trading, still relevant today. Okay, I'm going to talk you through some of the key terminology in trading these days, but really highs and lows, where are we? So if we go up to the very top up here, we can say this is a high. And then if we go down here, this is a low. There we go. There, that's a low. And price at the moment, according to this chart, is somewhere in the middle. Now, that's great and all, but how do you trade this structure? How do you make money from it? We need to drop down to possibly lower timeframes. Also, we need to know what to do when price breaks above the high or breaks below the low. We need to know what to do, so we've got a trading plan for that, and we're going to be going through that now. Within here, you have a series of these little bounces all across the chart. So let's start off at the high over here, work our way down, up, down, up, down, up a little bit, so on and so forth. And I can click through this in a matter of seconds. There we go. This is it without any bias. This is exactly what the market does. So when I was teaching myself how to trade, I would basically use a line chart. I wouldn't be using the candlestick charts as what you can see when I zoom in a second. I wanted to use a line chart to see what price was bouncing away from, what it was doing, was it breaking highs, was it breaking lows? And I realized and then decided that actually just highs and lows isn't enough. I need to know which one it's most likely to go for before I can make a decision on what direction to get into the market. So if we look at this very basic structure that had been created, it pretty much follows a trend, okay? So we started off at a high, we came lower, went up a little bit, broke that low, went up a little bit, broke that low, went up, broke the high, broke the low, went up a little bit, broke the low, went up a little bit higher again, then broke the low, etc. You see what I'm trying to say? The market tends to move in this general trend until we get a sustained break in the opposite direction. We can identify when best to get involved with trades based on this type of price action. Now, that is the basics of structure, but what we're going to do is we're going to look into a little bit of terminology, which is how we're going to be marking up the charts in a second. Highs and lows are one thing, and that's just helping you identify on a wider scale of a chart. But we're going to look at two separate things at the moment, which are quite popular in today's SMC world. I do it slightly differently, so this video is going to be a little bit different from some of the other shite that you see on YouTube. There are two terms which are used quite often, BOS and ChoCh. BOS is the acronym of break of structure. ChoCh is an acronym for change of character. I'm going to show you now exactly what they look like. So, on the screen right now, what we can see are two inverse breaks of structure and two inverse changes of character. Okay, so to talk you through this, we always have a starting point. Okay, don't worry necessarily where the starting point is, but we're just going to start on this little leg here. Okay, so we've just got a starting point and price moves upwards. When price moves upwards, it doesn't matter if it's multiple candlesticks, multiple times, you just want price to be moving up without pulling back, okay? As soon as you start getting a pullback, we know that we're on potentially for a break of structure. Price will move up and then it will pull back. And then when it breaks up again, that is called a break of the structure. You're actually looking at a break of the previous high. And what that does is it creates a new high over here and it creates a new low. So as soon as you start moving up and you get to the top of wherever you're going to go, as soon as it starts pulling back, you actually have an established low, an established high. And if that established low does not get broken before the break of that high, you have a break of structure, okay? And the same happens in a falling market. So you have, again, a starting point and price moves down. Price will retrace at some point because it's coming back to collect liquidity out of the market, something which we're going to be covering in a future video. It pulls back and then it presses down to break that previous low. Okay, so it's breaking this low and now it's just left behind a new low and a new high without breaking that high. So what you have is a very simple three-leg structure. Okay, so for the top one, you have a starting leg, a pullback leg, and a breaking leg. For the move down, you have a move down, a pullback, and a breaking leg. Okay, so that's break of structure. It's just three legs in the market. It can be single candles, it can be multiple candles, but really you're trying to follow the structure. It's the primary areas of the market, just like what we identified back over here. Okay, and change of character can be formed with just one more leg. Exactly like the break of structure, we have that pattern to begin with. So we're looking for a starting leg, a push up in upward market, a pullback, a break of that high, but then we have the change of character where the market moves down and breaks that most recent low. Don't worry about this old leg. We do have reasons to keep aware of it, but the main leg which we're concerned about is this most recent low. And that most recent low is always the middle, okay? So the furthest point, not necessarily the middle on the chart in terms of placement, but the furthest leg between the break of the high, so the previous high and the break of it. So you want to go to the furthest point. That is the low that we want to get a sustained break of. And the reason for this is that the market is indicating that it's now shifting in momentum, okay? Especially if this downward leg is aggressive. And what I mean by that is in terms of time in which it takes to get there, and also the power of the break. Is it with a body break? Now, this is where I vary from standard SMC. I require a body break. It massively improves our stats. It helps us stay in the market in the correct direction. It helps us pick the lowest swings and the highest highs. It helps us enormously. And you're going to find this out through your own data gathering. Okay, so again, in an upward move for ChoCh, we have a starting leg, a move down, a pullback, a break of the low, so a break of the structure, And then we have that reversal leg, which ends up breaking the most recent high and confirming ChoCh, change of character. Now, the key thing about BOS and ChoCh is, one, it's good to just label what's going on the chart. We know that we get a break of structure about 65% of the time, okay? It doesn't matter if it's with a body or if it's a wick, which means you're gonna get ChoCh about a third of the time, okay? What we do in how we trade is we couple these patterns up with certain placements in the market. So we'll use certain confluences, such as points of interest, order blocks, sweeps of structure, mitigations, etc. There's more and more things to put into this to improve those baseline statistics of 65% and 35% or thereabouts, depending on what time frame you're looking at and which currency pair you're looking at. Or if you use this with cryptocurrency, or if you use it with oil or gold or anything else, the same principle applies. You're always trying to target BOS as your directional trend, because we know we're going to get that 2/3 of the time. So that helps us with our direction. So how do we actually put it into the charts using live information? So what I've done is I've just gone back to a fairly basic part of the chart where the market starts to trend, just to demonstrate what to do. And we're going to jump into a more complex area, which I've just found, which I think I should talk you through as well. First of all, the key thing that you need to do is you need to go up to this part of trading view and get the horizontal ray and mark out BOS and ChoCh. The way in which I lay out BOS and ChoCh on my chart is I always put the signs over to the right. And the reason for that is when the market moves, you still want, even if you're looking at it with your mobile phone, to see it on the right-hand side of the screen and not leave it all the way over here on the left so you're confused on what direction. Additionally, I'm in bar replay at the moment, so I can't do it, but go to add alert. Set your alerts and just make sure that it's on the candle close when you get BOS and ChoCh, okay? So let's get them in the right places. So with BOS right down here, ChoCh is up here, okay? Okay, so let's just click on a little bit. Make the screen a bit bigger for you. So we have a pullback candle because we didn't break the low. And then we get BOS, okay? So what we're going to do is we're going to move BOS first, and then we're going to find the highest point between here and here, and we're just going to move ChoCh to there. All right, so what I tend to do is I then get the trend line tool and draw across and just put BOS. The reason why we're doing this is we're going to be adding these up at the end and putting your results into the comments section. So I want you to count how many BOSes you got, how many ChoChs you got, what time frame you're using, and what instrument you are using. So what I mean by instrument is either Euro USD, gold, AJ, could be using Bitcoin, anything that you want. Just put your results in the bottom. Let's click along. We've got the pullback, and then we've got a break of structure again. Okay, so one key bit of information here is that if there is not an apex, i.e. what you want is a key pivot point, you just leave ChoCh where it is, okay? So at the moment, we're not going to move ChoCh. So we just added BOS. We haven't moved ChoCh at the moment. Pullback and a break, okay? So again, we do have another BOS. We have that pullback candle, and we have BOS again. So again, we're going to move BOS first, then we'll move ChoCh to where it needs to be, which is the furthest point at a pivot right there. So that's our BOS. And again, we're looking for a pullback candle. So technically speaking, you can move BOS down, but you don't need to mark BOS up when you just get a continual break, okay? It's only when we're looking at a pullback, like so. So if we continue to break down, then we'll write BOS, but you don't need to tally every single one of these candles. And again, we have BOS. I hope that makes a little bit of sense. Let's jump to a complex part of the chart. Here we go. So we've just skipped forward to January 2023, away from 2018, where it was trending really nicely, just to identify an area where it can get a little bit complex. And on here, let me just draw this out or explain it a little bit better. We had ChoCh occur up here. We've got BOS down here. Price had pulled back. We've got to our highest point. We came down and we got BOS. Nice and easy. Then what we had was a bit of a minor pullback. Okay, so we had a minor pullback, pressed down. We didn't break this low. See, we didn't break lower than that. And then we got another pullback, creating this little apex, okay? Now this little apex is not the furthest point between the previous break of structure and the actual break. It's this, but this does not have an apex. It does not have space either side of it. It does not have a lower left-hand side and a lower right-hand side, to make it really simple. Okay, therefore ChoCh stays in its place. Okay, and there's plenty of reasons for that, which we go through in the confluences section. But for now, just continue it like this. But this does get a little bit choppy, so it is worthwhile paying attention to. I'm going to try to click through quite slowly, just so we can do this together before I leave you to do it by yourself. BOS press down a little bit, big news candle. And then we get ChoCh, okay? So what we're going to do is we're going to mark on here where ChoCh is. Let's just draw that on. We grab BOS first, and then we move ChoCh. But this is a big caveat. ChoCh now goes from here down to here. These are the two furthest points because we did not move ChoCh before. Okay, so ChoCh now goes down to here, not to anything else, it's just that. So following on, we're expecting the market to move up because we've got a change of character. The market is moving up. Okay, ideally you want to take a couple of seconds after clicking the button. I'm just clicking through quickly because you want to try to observe what happens in the market. Now with this one, what's happened is that we've had a break of structure because we had the pullback candle, which is this little blue candle. And then we can mark on here, BOS. A little hint or a little tip for you, if you wanted, is maybe use different colors for BOS and ChoCh, okay? Maybe have ChoCh in red and BOS in green or blue or something like that, because when you're counting them at the end, it's going to help you with just speed, okay? So it will stop it being so boring. So we're just going to move ChoCh to the lowest point right there, and we're going to press on. So we've got a pullback candle. This is an indicator, by the way. I use an inside bar indicator just to help me identify them. The inside bar is again one of the confluences that I use, not necessarily everybody in FTR, my trading community uses, but I tend to use it to get into the turns in the market very quickly. I get more stop outs as a result, but my risk reward ratio is staggering. So we'll keep on pressing on for the time being, but don't worry about those inside bars. They're not relevant to you at the moment. So we get a break of structure up. So BOS moves to there, draw it on as so, move ChoCh, keep clicking. Break of structure. Now, what do you do if you get a press up after you get a BOS, but the press up is also the lowest point? For me personally, it's inside structure. It doesn't matter so much. But for the purpose of this, what I'm going to recommend that you do, at least for the moment, while it's relatively basic, is we are going to move ChoCh, okay? It's not how I trade, but generally speaking, it's what you could do for this. Here we go, we get another break of structure. We can move our ChoCh. We have a ChoCh down, but only with a wick, so we don't move ChoCh. Now I'm just going to check the close of this blue against this initial press down. So the low on here was 7748. The close of this blue candle was 7746, which means that we did indeed get a press down. So again, what I'm going to do is I'm just going to mark ChoCh on here. So we're going to move BOS down to there, ChoCh up to the furthest point. Only ChoCh with a wick at the moment. And now we finally get a break higher than this highest line. So again, we have a switch around. Let's keep clicking. Get BOS with a wick. We move our ChoCh to the lowest point. And then we finally get ChoCh with a body, which means we grab BOS from the top, move it to where it needs to be, get ChoCh, move it to the furthest point, and we have our potential trend change. Now, what I want you to do is go back through and count how many BOSes you got, how many ChoChs you got. Tell me the instrument that you used, the time frame that you used it on, and the time span that you used it on. I would recommend going back to the start of 2024 using it on the H4 and on the M15. So do one group for H4 and then another group for the M15, because those are the two timeframes that you're going to be using predominantly. Now, as I said before, I do all of this all day, every day, okay? If you want the potential to earn while you're learning this stuff, use the markup service. The link is below. And don't forget to subscribe, because in the next video, we are going to be going through the concepts of zone to zone using liquidity. And that is critical to your trading success. Catch you in the next one.